FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
This episode of the Financial Survival Network is brought to you in part by Sandstorm Gold Royalties. Sandstorm Gold Royalties is a different kind of gold company. They purchase royalties on select mining operations and receive a percentage of the revenue in return. Sandstorm now has a portfolio of over 185 gold royalties around the world. See how gold royalties differ from other gold mining investments at sandstormgold.com. That's sandstormgold.com. Sandstorm Gold Royalties trades on the TSX as SSL and on the New York Stock Exchange American as SAND.
Welcome, and you are listening to the Financial Survival Network. Happy New Year. It's January 2nd, 2019. What a year 2018 was, a one for the record books in more ways than one for sure. Hey, as always, be a part of the show and email us, kl@kerrylutz.com. Well, it's that special time of the year, the quarter, the half year, and that is our major market review with Mickey Fulp. And you find Mickey, don't forget, at mercenarygeologist.com. Well, Mickey, hey, first, Happy New Year, and wow.
Happy next year. We couldn't have 2018 end soon enough. Bad year pretty much all across the board. I'm looking at red. Occasional black. We'll talk a little bit about that. But U.S. markets had a miserable quarter after record highs in August and September. U.S. really was just catching up with the rest of the world in equity markets, which generally had a horrible entire year. So the Dow closed at 23,327 on New Year's Eve. Horrible month, down about 9% on the month. Overall for the year, about 5.5%. All that came really in the last quarter. S&P 500, 2507, down 9% on the month, down 6% on the year. NASDAQ, 6635, down 9.5% on the month. 17% down on the quarter as the FANGs got beaten up. Yeah. They were really overbought. NASDAQ, though, was the best performer amongst the major markets, only down 4% on the year. And the small business index, the Russell 2000, which we thought would do quite well with the Trump tax cuts, lost 12% on the month and almost 13% on the year.
Bloodbath. But, you know, Mickey, up until the past 10 years, having a down year in the markets wasn't like that unknown, unforeseen event. Like 1 out of every 2 or 3 years, 4 years was going to be a down year. We've had so many up years that we've forgotten, Sir Isaac Newton's admonition.
Point
right?
Very well taken, Kerry. This was the culmination, or the last quarter, the culmination of 10 years of a raging bull market since we came out of the global economic crisis. And we were long overdue for a correction, and from the highs, we have a significant correction, the highs of August and September, but, we're still down 6% for the year. And so I think the question becomes, is this a fair dip in an ongoing bull market, or is this beginning of something else? I would probably tend toward the former right now, because U.S. economy looking pretty good, 3.5% GDP for 2018. Now, December numbers haven't come in yet, but that's the consensus. Record jobs numbers, record low unemployment. If you would have told us when Trump got elected that we were going to close with a Dow over 23,000, everybody would be jumping up and down.
Oh, for sure. And but one thing, though, that we always got to look at is the fact that when you see unemployment rates at record levels, when you see unemployment claims for new unemployment insurance at generational levels, that could very well mean a peak in the economy. And, if the stock market truly has taken on its traditional role as a leading indicator, could be indicative that maybe we're heading for rougher economic times ahead, Mickey.
Well, certainly, but, it takes, 2 quarters to make a recession, and, everybody's talking about recession fears, so it's not going to happen at least until the second half of 2019, if even then. So, it's a mixed bag. We have a disruptor in the White House, and he's disrupting, and the markets have become disrupted. So, but the U.S. performed quite well with the rest, compare to the rest of the world. Let's look at a couple of things we track. Toronto Stock Exchange, very negative all the way across the board. Closed down 6% on the month, 11% on the quarter, almost 12% on the year. That's to be expected because it's a very commodities heavy economy in Canada, especially with the oil patch. The big loser for we got one bigger loser, but the second biggest loser was the Toronto Venture Exchange, down 10 of 12 months this year, lost almost 35% on the year. But if there is a silver lining, Kerry, it's up 7% since it bottomed at the heart of tax loss selling on December 21st. And it's gone up and up and up, 6-7 trading days now. And we predicted this, and we gamed the market. And on paper right now, we have some significant gains on some of the stuff we bought, upwards of 50-60% gains in those 5 or 6 or 7 trading days. So, good. Going on, emerging market index, another horrible year. Not so bad on the month, only down 3%, down almost 17% on the year. This is really China slowing. The trade tariffs, certainly they're taking it a bit in the shorts over that. Who's winning that? I'll ask that rhetorically. But once again, same as the Toronto Venture Exchange, down 10 of 12 months on the year. And finally, the VIX went crazy over the month, hit way over 30 a couple of times, closed at 25. Volatility is back this quarter compared to what we'd seen with record low VIXs for a significant portion of last year.
Yeah, hey, it's pretty interesting. We saw the VIX pop up as high as 51 intra-month, and it's still well above where it was when we looked at it. It hit its low at around 951.
Yeah, all-time low.
Yeah, in September, and then it barely.
Well, that was September of 2017.
Of last year.
Kerry.
Yeah, 2017.
But it hung around in that 11 to 12 range for a significant portion of 2018. So, volatility is back. We embrace volatility, gives us entry and exit points, i.e. the Toronto Venture Exchange, which we just gamed successfully over the last week or two.
Yeah, it was ripe for it and predictable, as is death and taxes. As long as you have death and taxes, you're going to have tax loss season on the venture.
Yeah, as long as we have these crazy capital gains taxes.
Yeah, exactly. So let's look at our so-called currencies. Man, there's one here that I know you're going to be gloating over. And
I'm not gloating, but no reason to gloat.
Well, you should be.
Just glad you stay out of it,
Yeah. Well.
Starting with the currencies, we've got the dollar, DXY, had a very nice 9 months straight up. closed at 96.17. Now it hit intramonth 97.5. Actually lost 1% on the month, but it gained 4% on the year. And it really is just the lesser of all fiat currency evils. No one, it's with all this volatility in the stock markets, people looking for safe havens, and the dollar is the go-to fiat currency as a safe haven. You certainly wouldn't want to own euros with all the problems with Brexit and Italy budgets, and it just goes on and on with that currency without a country. It closed actually at 115 for a 1.4% gain on the month, but it lost 4.5% on the year. 10-year Treasury came down to Trump versus Powell, Trump versus the Fed. Who's winning that war? The Fed is now backing off. We saw interest rates drop to 2.69 at the end of the year. 11% drop on the month. Now it is up 12% on the year with 3 interest rate rises. Or was it 4 this year? I guess it was 3. But this prediction that we're going to have 3 in 2019 is certainly going by the wayside now as Powell and Trump continue with their war words. And finally, Bitcoin. So, when I was writing my notes for this in preparation today, I thought, why is it here on the money page? Because it's not money. You tell me
that's where you put it.
Money that loses 81% from its all-time high 12 and a half months ago, and from 19,343 to close the month at 3690. It got as low as 3,200. That would be like thinking, or I'm going to say like believing, Carrie, and I'm not a believer in anything. I refuse. That's like someone believing that the Argentine peso is money. It's ridiculous.
Yeah. Well, I had actually written a newsletter on December 25th of last year saying, sell half your Bitcoin. It's a bubble. It's going to burst. It was the title of the column was something to the effect of, it's the dopamine stupid. When markets trade on dopamine, then you better get the heck out because you're going to get burned and burned badly. And you know what? I'm thinking that this thing is going to zero, but it's not going to go to zero in the way that anybody expects it to. There's a major security flaw in all cryptocurrencies. I don't want to get into it. I mean, I'm not a computer expert by any stretch, but there is a major fatal flaw in all of the cryptos, crypto 1.0, we'll call them. And as a result of this, if a private party or a government decides to wipe them out, they'll be gone within a week. And that's why I'm extremely bearish on them. Look, it broke through support. I said it was going to go down to roughly 3880. It blew through that. It was down to 3200, which means that just from a technical standpoint, it's going to go below 2000. That's my prediction. I don't care what anyone says. I always like to point to the example, Mickey, after Tulip Mania popped, there were tulip farmers who were still planting their fields with bountiful tulip bulbs, thinking that the price was going to come back up. And there are still miners out there losing money on every Bitcoin because they know it's going to come back, and it ain't. That's
Carrie, sorry to interrupt, but I have a South Seas vacation that I will sell you right now.
Oh, hey. I'm always up for a South Sea bubble trip. So now we got to get to the metals. It wasn't pretty there for some of them, but certainly nothing like other markets.
Well, with safe haven demand, with stock market volatility, plus the seasonality of gold, and gold always goes up from November 1 to February till the end of February. It's a common occurrence. Gold gained 5% on the month, closed at 1282. It recovered most of its losses for the year and closed the year down only 1.5%. It was down 6 or 7% for the year back in the end of September. Silver, which is always more volatile to the upside and the downside, had a very nice month, finished above $15 at $15.47 for almost a little bit more than a 9% gain on the month, but it still lost 8.5% on the year. Mm-hmm. Big loser was platinum, very oversold. There's some stockpiles in South Africa with diesel demand down, catalytic converter diesel demand used mainly platinum. Platinum closed at less than 800. That's a 15-year low since November of 2003, closed at 794. That's a 14% loss on the year. And meanwhile, its sister metal, palladium, reached an all-time high of 1252, and that is up a whopping 19% on the year. There is a palladium supply deficit, but I'll guarantee you this is overbought and overvalued, and it will spike. I have a piece coming out hopefully on Friday or Saturday on gold palladium ratios, something we've never looked at before. It's going to be quite eye-opening, I think. Subscribers will have that in their mailboxes. And finally, copper had a horrible month, quarter, half, and year, down almost 4% on the month. 3% on the quarter, 9% on the half, and almost 17% on the year, closed at 272. The specs, the hedge funds, have completely left metals space, hard commodity space, but especially the base metals, with Chinese manufacturing down for the first time, I think, in 3 years. Meanwhile, copper is in backwardation forever. You can't find a CME listing going out something on the order of 3 or 4 years when you see them that it is not in some sort of contango. And this is totally due to the trade war with China. China is blinking. They have to blink. Their economy is tanking. Their stock market's down 25% in 2018, despite very strong fundamentals, not only for copper, but throughout base metal space. It ain't going to change till the Chinese come around.
Yeah, and eventually they're going to have to. And
absolutely.
It's either that or war. And I don't think anyone really wants a war at this particular point in time. It's to nobody's advantage. But, hey, now we got to look at one of the real big losers from the year. There were so many big losers for the year here, Mickey. It's hard to know which is which here. But energy, with one exception, really took it on the chin.
Well, yeah, the oil markets are just a mess in the last quarter. We're having good years until October, and then all hell broke loose. Gary, there is a glut of oil in the world. The U.S., the Saudis, the Russians, all just pumping or flowing like crazy, whatever kind of well you got going. So we've got a supply of oil, and with the world economy weakening a bit, we have an oversupply, and that's not going to change until the Saudis and the Russians cut production, or OPEC, let's say. They have plans to do that. WTI, 45.41, down 12% on the month, down 24.5% on the year, 39% on the half and quarter. Brent, similar thing, down to 52.28, 12% down on the month, 37% on the quarter, 34% on the half, 22% on the year. This idea, and We hit the Malthusians below the belt a couple of weeks ago with a music called Peak Oil, Peak Gold, Peak whatever, Fooey. These Malthusians that used to beat up on me with their take of peak oil, they've all gone hiding under the carpet or back into like cockroaches back into the woodwork. It's just ludicrous. We have a glut of oil in the world right now. Enough of that rant, I guess.
Hey, just to add to that rant, because I think it's worth adding to. We were supposed to be out of oil 100 years ago. Every time you look, we're supposed to be out of oil. We're running out of this stuff. And every time you look, we never have produced more than we're producing now. So what does it all mean? It means that these people really don't know what the heck they're talking about.
Yeah, they're pessimists. They're half glass empty sort of people. They have a very negative view of the world. They are disciples of Thomas Malthus, who was a British English cleric professor,
right,
and never do well in the 1800s, who predicted the world was going to run out of food when our population hit 1 billion or something like that. I know it's ludicrous, but anyway, so for people that are interested, you can go on my website. That musing is now available to the general public. Meanwhile, on positive space, Henry Hub was up a whopping 1% on the year, but it took a big hit this month. It closed last month at 465, which was a multi-year high. With warm weather, that market's so beholden to speculators, especially in the Northeast U.S. With warm weather in the Northeast tier, it closed at $2.94, down a whopping 37% on the month.
Hey, you know what they call that market? They're trading in the futures for nat gas. They call it the Widowmaker.
Well, it all has to do with the weatherman, and the weatherman can't get it right more than about 2 or 3 days out, 70% of the time. As I'm looking here in Albuquerque with below freezing temperatures and 2 inches of snow on the ground in the coldest weather in 6 years, and more storms coming. Who knows? But
nat gas really is a Northeast dominated market, which hence Henry Hub, and that's why.
And Henry Hub is actually in Louisiana, so so figure that out.
This is true. I don't quite get it, but it all depends on the Northeast, especially Boston, because their supplies are the tightest. And
they refuse to build a pipeline.
Right, they're morons. They're complete and utter morons. And then they can't figure out why the price goes up to $65 per million BTUs.
They'd rather burn diesel in their basements than those fuel oil stoves, versus building a pipeline with clean nat gas. Figure it out, chowderheads.
Dumb things. So.
Enough. I'm on a rant today, Kerry. I got to get off that subject. So let's go on to uranium.
I just want to say, I got something that could put you on a bigger rant. We're going to do a special on this, by the way. I'm talking about electric cars, how they're taking over the world, okay? We're going to do a special on that. Well, of course not. They sold 80 million cars last year, and a whopping less than 1 million, I think, or maybe it was 2 million, are electric, all electric. So, I'm tired of hearing about how electric cars are taking over the world, because it's not the case yet. All right. It's got a long ways to go.
Well, they're never going to, in my lifetime, they're not going to take over the world or years either.
Right. So that's why we need to do a special on it, but I'll let that go. Let's get to the next. It's getting exciting.
Uranium had a great year. Closed a little less than $29. It's been plus or minus $29 for about 3 months now, closed at $28.70, essentially in a market that does not exist over the holidays. So it trickled down a bit. lost a nickel on the month, but it was up 4.5% on the quarter, 26.5% on the half, and almost 20% on the year. We are finally seeing a bullish horizon for uranium. We're hoping that's going to do well in 2019. There's some macro events, macroeconomic reasons we think that's going to happen that we won't go into now.
All right. We will do a special on uranium at some point during the year as well, because I think it's definitely one of those cases of every dog having its day, and this one is going to be sooner rather than later. Finally, because we've been
finally
for years. I mean, this is years.
Seven years of a bear market since Fukushima.
Yeah. So
almost 8 years. It'll be 8 years in March.
Pretty spectacular when you look at it, the way that it's
well, and once again, that's you can draw analogies with the oil market. We have a glut of oil, and everybody's open the valves and making more oil, and that's what happened with Fukushima. 10%, 12% of demand went off the market immediately, and what did producers do? They just made more uranium. So, a significant amount of the uranium bear market can be blamed on miners that did not react to the market.
Yeah, which often is the case. The mining industry in many ways, Mickey, is the worst business in the world in so many ways. And yet when they hit it, it's a glorious thing to watch.
So let's wrap up here with a couple of ratios, things that really piqued my interest or drew my attention over the month and really over the year too. And that's they have to do with platinum and palladium. So the platinum to gold ratio is now at an all-time record low since 1970, when those metals came
deregulated,
were floated versus the U.S. dollar. Or I should say the U.S. dollar was floated with respect to gold. So platinum to gold ratio, all-time record low at 0.62. And the platinum to palladium ratio, just showing how undervalued and oversold platinum is right now, is 0.63. And that's an 18-year low since 2000, 2001.
That's pretty shocking. Well, hey, you gotta look at it, and these markets move over time. One of the things that we do by doing the monthly perspective, the major market review, is give perspective on what the market's really doing, how it's behaving over time, so that you can sit back from the day-to-day back and forth nonsense and really understand what the heck is going on here. And, when we look at it, things like this, they start popping out, like the fact that gold-silver ratio was 86.4 at the end of November, went down to 82.9. This could be a trend reversal. We're looking at this, the numbers just every month on the platinum to palladium, it just goes down, 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 down. This is months and months in a row here, Mickey. We're looking at going back to 2016 when this tumble started. So anyways, that's why we do the review, to put things in perspective. Hopefully we put things in perspective for you heading into a fresh year, 2019, hopes, dreams, aspirations yet to be realized. Mickey, it's always fun doing this. Wish you the best, happy and healthy to you and yours for the coming year. Hey, make sure you follow Mickey on Twitter if you haven't already. It's at Mercenary Geo. Follow us at Kerry Lutz. And any questions, comments, etc., just give us an email at kl@kerrylutz.com. Mickey, we'll talk to you again next month in February.
I look forward to it, Kerry, and we just completed our 7th year of doing this show.
Amazing. And I've been doing this show, Financial Survival Network, for 7.5 years now almost going on the 8th year here. Nothing else I'd rather be doing. And hey, hopefully all of you out there have gotten a lot out of it, and love to hear from you. Mickey, we will catch up with you soon.
All right. Thanks a lot, Kerry.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.